The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and I'm the host of this show, but also the author of the opening call, my daily newsletter. And within that context, you can go to the front page of TFNN, check it out. We've had some really good positions. We've tried to short a couple of times with some little success and no success, or just a break-even trade. Getting close to adding some shorts again right in this particular framework. Let me go through the numbers. The Dow is up 96 at 25,522. The S&P is up 769 at 2752. The QQQ Index 100 trading vehicle up 47 at 171.38. The missing one, IWM, is at 153.04, up 5 cents. You've got the TLT down 29 cents at 121.28. You've got gold up 2 at 13.16, and the dollar's up 27 cents at 96.99. I want to do that because I do the update at noon. I like this time now. I've decided I've been in the game long enough. I don't have very much to prove other than to just consistently be as consistent as possible. I feel very strongly that my focus for a little while now has been on the educational side, as well as, of course, giving a daily call, and I'm going to continue that. So what I'm looking at here is there's a particular technique in the Chapman wave called the instant restart. For the Dow, we've gone from a low at minus 19% from the all-time high to the low of the 26th of December of 21,712. We've gone very strongly. Mostly green candles. The only thing we've done is gone sideways for this oval pattern, and that was back at about 24,500, and that was kind of the third week or so of January, and then we broke out to the upside. We've gone into this uptrend line. You see this green uptrend line in the left side chart. That is the daily chart. There's a pattern that I call the Chapman wave inside Chapman wave stork leg formation. Oops, I was reading too many. There you are. Chapman wave stork leg formation right there. That's this long leg, body, neck, and then the neck concluded at a peak D with a tiny little doji candle. And my target for the downside, first initial target was 24,860. We went to 24,880, and then started that very big move. Was it Friday? And we turned around. And we've gone Friday, Monday, Tuesday. So no, today's Wednesday. Monday, Tuesday, Wednesday, we've had some big moves to the upside. And now this is a leg deep. But what I've been saying to subscribers to my opening call and to here on the show, I've said very clearly that in my work, this MACD, the moving average convergence divergence, has turned down. It was holding beautifully, it turned down, but it did not cross the red line negatively. In fact, it deflected higher, and that allowed for a bounce. And that's the bounce we got yesterday for the U-shaped pattern. This U-shaped pattern has gone a little bit higher than the 25,000 right there, the 25,439 high of the 6th of February. If it closes, let me just see. Yeah, if it closes anywhere in this area, even maybe just 25,490s or higher, I have to conclude that this is more like a Chapman wave right arm extension. Doesn't matter. Whatever it is, the stochastic is now under 80% for a couple of days. It's 78%. It was holding beautifully up in the 90s, and then it slipped very quickly from the 90% level down to the 77. Now it's at 78%. I suspect that we're getting real close. Look, the 120-minute chart has gone to a peak E. Let me just education. Let's go to this. So in my work, I do a couple of things, and something that I've worked on for maybe 3 years now. I try to put it into practice to be able to. It's the only way you can really test something out is to put into real live action. There's a technique that I call the Chapman wave 5. Sometimes I have to modify it a little bit, but within the context of putting in that 5 with a circle says that that is, in fact, a very important level. It can go a little higher. I call it a mini coda phase. It only applies to this particular technique, and that's where we are in the daily, but I'll get to that in a moment. I was anticipating from the move yesterday that we made a beautiful cup formation in a Chapman wave. It's called the left side, right side price time match. And what you do is you go from the left side, the number of bars to the downside. If you can find a plumb line that looks like it's going to be able to match, and I didn't know that until we broke above this level of 25,196 intraday yesterday, that there was a potential then for a Chapman wave inside wedge. That's the green dashed line, that right there, green dashed line. That's your target resistance line, as well as the exact number of bars before you break that 25,496 high would have been, should I count them? Sure. 1, 2, 3, 4, 5, 6, 7, 8. 9 was the low. 1, 2, 3, 4, 5, 6, 7, 8. 9 was the high. It's just unbelievable how this works. It's called Chapman wave, left side, right side price time match. And we get there and it sneaks above. It goes to a peak. E could be E/B. I'm calling it E for now. Chapman wave 3 pulls back for the 4. And today I said we want to see a spike above yesterday's high to go to a leg F, possible Chapman wave 5, and that's where other things can happen. That's exactly where we were. Normally I would have said let's short above peak E, but there was so much power that it was impossible to say where your stop should have been. I didn't want to short just above it and then sit there with 2 Dow diamond points or whatever it is that we were shorting. It felt too. I'd rather have patience to wait for the actual trade to unfold, even if I miss the exact top, even though I try to identify it. So 25,625.95 is really important right now. Another move above it is possible. That would extend this. Well, if it's in a 120-minute chart bar, it has to be this one. If it's the next bar, it becomes a G/C. It gets a little complicated. G/AB. Oh no, that's right. That's an F/C. Yeah, so that could be a D. Oh, very good. So G/D, perfect. But in the meantime, I think we're in an area here that says tremendous resistance. To confirm that, look at the Dow with the Chapman wave automated resistance points. We've pushed and pushed and pushed and gone slightly above the 25,498, 25,576, and now 25,670 resistance points. That's the last one left. The high today so far, what did I say? It was 25,625. So we're about 45, 50 points away from that level there. And you can see it's not a Bollinger Band. It's not a Keltner Band. This is a band that goes with a particular formula that I had someone develop for me. And that's at 26,262. I don't anticipate in this move we're going to get that high. But that is something that I'm watching. But when it starts to turn down and this green line, that is the derivative. If that derivative starts to move to red, that means we're starting to turn down. It's still green. So let's see what happens. So we've got that 10-minute chart. Did it give anything? Yeah, 25,622. Right, we're in that area of resistance. We'll see if this is going to be just a mini pullback where it's a little more serious. There has to be bad news to accompany this particular move down. We haven't got it yet. Basil Chapman, Tiger Technicians Hour. Dow's up 85, S&P's up 6.58. I'll be right back after these messages. Send in your questions. Basil Home Builders.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, we're back. Basil Chapman, Tiger Technicians Hour. So I had a question about Toll Brothers at 37.67, 37.17, 36.85. A lot of resistance points. So if Toll suddenly breaks above 38.33, that is really important. Weekly chart is improving a lot, and that monthly chart, you can see that was a tremendous decline. So that was automated. Let's go to the real thing right now. Toll Brothers, we're looking at TOL, where the bell tolls, and it is in leg G/B. I decided I would give it an alternate count. Now, something was mentioned a little earlier. I'm going to get to it since I like to look at this. We're going to look at every day's technical, Chapman Wave Technical Friday, and I'll do that. There's a question. Someone said they restarted the count on the 120-minute chart in the Dow because the stochastic went all the way back under 20%. They restarted it. I like that thinking. I've done a lot of work on that. I'm going to explain something so that you can keep it as an alternate count. I've done that, and I'll show it to you in a moment. So let's go back to this here. What I am looking at is in Toll Brothers, trading at 36.56, down 90 cents. The MACD is starting to get real shaky in the daily, and so is the stochastic. And it's saying to me, as much as I love the way the weekly and the monthly chart have appeared on a short-term basis, instead of calling this an F and a G, I'm calling it a G/B to say there's enough strength above the 200-period exponential moving it. Let me just show you something. The beautiful cup formation. We did not get this. This was on my list. I even did it in a webinar, and we didn't get it because I just thought that the way the home builders have been trading, they're moving in stair-step fashion. But, you know, you buy it, and I would be stopped out because I like to have fairly tight stops because I believe once something's working for us, it works really well. And we would have been stopped out because, look, it spiraled from the low that was made at about, what was it, 28 something? Yeah, 28.68, double bottom, 28.68.69 on the 22nd and 23rd of October. Spirals, I mean, really spirals after the terrible down move up to the 34.36 area. I'd say 6 points is pretty big. Then it comes all the way back and it goes to 29.25. And then it goes just to a modest high at 34.33, call that peak C2. And then it had a little inside AB, and then finally, and it comes back down to the 30 point. I mean, these pullbacks are massive. So I decided that it just wasn't the pattern I was looking for, but it has gone beautifully up to the 37s, 28 to 37, 9 points. That's what is that, 26% or something? That's a very nice gain, no more. And now what I'm looking at is that it's getting choppy with a 200-period moving average. So this is what I'm going to say. The question is, Basil, home builders told, buy now or hold off, sit on hands. I'm going to say in your case, I would start entering just on a very short-term basis, because I think that yields are about to come down a little bit, because I think the TLT is about to have a bit of a rally. If the market starts to another consolidation, this time a little bit longer, and really it needs bad news and everything's been good so far. I don't know where it's going to come from. I'm just looking at chart formations. I'm going to say to you, you could start a 36.53 just if you have no position whatsoever. Yes, you've got a 2-point risk. I know that 2 points for you on a $36.50 stock is not an issue. The issue is, will it be going higher? It's in a leg D. It made it by 1 penny today. 1 penny. Let me just double check. Oh, it did it in the future over 37.62, 37.60. Oh, it did that. It did that early this morning. In fact, I put the D in. That was premature. I felt sure that it would make it by 1 penny. It hasn't done that. So even this GB, I should not have put that in, because it is. This is still an F/A. Okay, cool. I'm pleased I did that. Never put in. I do closing. I do real-time prices, not the overnight. So in other words, from 9:30 to 4 o'clock or 4:05. That's what I use as trading. That's what shows up on my chart, not the overnight stuff. So this did not do it. It did it earlier in the day. I think at about 7:30, I was doing it, and it didn't do that afterwards. So I'm just saying, I have a little patience. If you want to start a little position right here, this is your feeler position. This is like if you were going to buy 300 stocks, you're buying 50 right now, or even 25. You're just getting your foot into the door, and you're saying, okay, fine. I just want to get a feel for it. Why? Because if this thing pulls back to the 35s, email me, text me, do something again, ask me in the den. Yes, I'll have another look at it. That's kind of the area that I'd start looking at it, in the 35s. And if it suddenly breaks out to 37.92, yeah, then I'm going to say, all right, at that point you can just start a little bit of position. Now, imagine you've got no position. If you want, realizing it could pull back $1, $1.50, even maybe a little bit more before it starts to move into the 38s a little later on, maybe in the springtime, then I'm saying to you, start your position right now, just with a little nibble. The real position I would be thinking of is around about 35, and that's where I still want to check on the pattern, because if it pulls back under 35, it could go a little deeper in an arch formation. So this is it. I like it. I like it for the more intermediate term. I don't know if it's going all the way back into the 50s. I just think it looks pretty good. The MACD, the stochastic, and the weekly chart have improved a lot. Toll Brothers is a buy, but if you aren't in already, your best opportunity is to wait for some kind of a pullback, or you just nibble here, and then you might have to add if it breaks out into the 37.90s. I think it's going to be pulling back a little bit more, but then you got to be ready, because I think that the TLT is telling me that it is holding well. It's failed at a peak D below the recent January high of 123.86. So this pullback could make a second arch. So you're getting a double arch formation. We used to call these different things, but this is called a double arch formation, like a W. And then it could start to move higher. And the weekly chart of TLT is holding pretty nicely. And I'm just saying that I think we're going to be pulling back within another couple of days. By Friday, I think we're pulling back already in the general market. I don't know what's going to do it. And then you still got to be ready for any news that could have a sudden spike to the upside. Tough period we're in, but technically, I think we should be pulling back. Okay, that's that. Okay. Next question was GWPH. I hope I can get to that Dow chart just to show you. Yeah, this is another indication. This is your GW Pharmaceuticals, medical marijuana. Remember a couple of days ago, we were looking at it. I said, had a question about it. And I said, yes, it should go to leg C. That's exactly what it did today. It went above peak C in the daily of the 5th of February of 149.70. This is GW Pharmaceuticals, medical marijuana. at 148.83, up $1.30. It hit 152.19 today. Big moves it has. MACD starting to flatten out. It's got the dolphin look, and the stochastics down at 73%. On balance volume has been keeping it up. I'm waiting for the on balance volume to start pulling back. If this thing breaks under 140, if it closes under 142 in the next week, it's going to have a little timeout, and probably the whole sector of the medical marijuana and the MJ, which we are still long, which is acting quite nicely. It's at 34.84 right now. Will also start to pull back a little deeper. That completed exactly to the day. 2 days early. The left side, right side price time match in the cup formation from the 36.97 high of early November down to the 23.01. 24th of December low. Look at that beautiful cup formation. Peak D now is pulling back. I'll be right back. Basil Chapman, Tiger Technicians Hour. Guys up 78.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi folks, we're back. Basil Chapman, the author of the Tiger Technicians, the author of The Opening Call, host of the Tiger Technicians Hour. So that's my daily newsletter, and this is really a great time to be getting it. The kind of work we've been doing has just been pinpointing a lot of the turns, and I don't know if we're going to be able to succeed in this next one, but I think we're real close to some kind of a turn, even if it's just short term. But meantime, the question that I had was, it wasn't a question, it was a statement. On the Dow 120-minute chart, since the stochastic went to the 20 level on the 8th of February, I restarted the wave count and have us in wave C now. So let me show you what this is a good point. We went to this peak D, right here in the 120-minute chart, and that was at 11:30 on the 6th of February at 25,439. You went sideways for about 3 bars and then kaplop, opens and collapses to the downside. The support of 24,999.23 was held. It went to 25,000.51, I think it was, and then plop the next, and then it ran a little bit higher, then plop next day. And then we made that low on the 8th, and it went down to 24,883. Now, this is very interesting. You see the MACD, big, wide difference. The differential, the 9-period differential went down deeply. See the histogram starting to improve. And then the stochastic went down to the single, I think it went down to the single digits. Let me just double check. Went down to, no, it went down to the teens. It went down to 19. All right, so under 20, it goes under 20. Oh, there it is. I should have known that. Under 20%, and that's one of the techniques I teach in my methodology. And then it starts to rally. Now, the questioner says, don't you think that this can be a peak C? And I say, absolutely, it can be, because the MACD, the histogram is very positive, and the stochastic went into the 91% area and is holding flat. And that says now there's still some internal strength. I just want to be ready. So I've taken that D, because this low didn't take out the trough of 24,842. It went to 24,883. So that means that this D is still active. So that makes this peak here an E. Either it's an E/B, because you pick up that gray A right there, 25,196. And now you're in E to B, and today you push up and you go F to C, which is what I wrote here. My thinking is I'm going with an F for now, F for now. And right here, we've got F/C, because the MACD and stochastic are still good. And that's the reason why I haven't put a circle here for the 5, and I haven't put a down arrow for the F, because it can still recycle a little bit. There's just enough energy to be able to do that. Someone said, let's see, in the Dow, what was he saying? Oh, Pfizer is up nicely. So and Merck is up nicely. So you've got the pharmaceuticals in the Dow. So I'm going to just say that I haven't got a signal yet. I don't want to be premature here. I want to get it, if I can, exactly right. That's what we try to do. For years and years, you've heard me at PDs, E's and F's in the Dow. That's where we start short positions. Even if we have a long position, a core long position, I'll still do that. Doesn't matter. Right now, I'm looking at it. We have no position. I'm ready to start a short position, because I would like us to pull back. I want to get long on many stocks that have just gotten away from us, and I need a pretty decent pullback. I don't know where it's going to come. I'm thinking Japan is China's going to give us that opportunity. Enough with this. Let's just go on. A question I had here is IYR. So the IYR, which I'd mentioned a few days ago, was stellar, absolutely fabulous, is making this little turn. Now look, this is a particular pattern. I call it the snail pattern. I don't know what else to call it. I've called it that since back in 1980. So when we first started to get the computer on, I had a Mac computer, and I used to get from Profit, I think, Profit Company. I used to get all the data. I'd start on a Friday as the market closed, and on Monday at 6 in the morning, the final pieces of data. It gave me worldwide data. The whole weekend, all I got was data. That's how slow everything was. And then finally, I could do my work first thing on Monday morning. So this is a little different. It's automated, and now you can see these little green bars and tiny little dojis, and it's like it's walking the 9-period moving average. All of a sudden it stops, and it makes what's the potential for an arch pattern. We're looking at the US REITs index right there, and I suspect that it's giving us clues about something. I'm not sure if it's interest rates. I'm not sure just what it's going to be. I've got some inklings, but all I'm doing is saying it had a spectacular move from 71s, exactly 71.41 on the 26th of December. And 3 days ago, it goes to a high of 84.48, and it made a Chapman wave 2-bar reversal. 84.48, 84.45. It's actually a 3-bar reversal so far. And that says if the MACD starts to turn down and the stochastic turns, 94, which is fabulous, actually starts to pull into the 87% area, you would have to see the IYR go from 84.05 right now and start to trade under, not the 9, but under the 14-period exponential moving average. But actually, the way I do this is that not only do you have to take out some left side, some moving average of importance, that's 82.03 is the 14-period moving average, you'd have to close decisively below the first trough on the left, that's at 82.98, and then preferably start to trade under the second trough. In this case, I have to go back and see where that is, and that's at 81.86. That's a lot of work to be done. Not only that, you're getting a doji candle on the weekly chart with 2.5 sessions to go. Anything can happen. Let me make it clear. The IYR has been the most unusual chart pattern that I've ever seen in monthly charts. Look at the way it's really gone sideways from 83.54 to a high in the 84s, and all that support in the 65 to 71 area for years, for a few years. That is so unusual. That's not the point. This is the point. Look at this pattern. I don't recall ever seeing such a powerful and quick peak A, peak B, peak higher C, peak higher D, peak E in a monthly chart that is still way under the major high. And that major high was right here at the Chapman 2-bar reversal, 85.80, July of 2065, 85.79, 1 penny lower for a peak F top, August of 2016, pulls back very sharply to the 74 area, 72 area, 72.11, and then it starts an amazing rectangle formation, but it doesn't even go to the top of the rectangle. It goes peak A, peak B, C, D, in a very quick succession, plummets, takes out the left side low of 72.11, goes to 71.26 in February a year ago, February of last year, has a big rally, doesn't make an all-time high, but it goes over that previous peak. This is an amazing chart of 70, what did I say it was, of 83.27, and that was in December of 2017, and then it sneaks above, and it goes to 83.62, and then it plummets. Did it go below 71.26? I don't think so, no. It went to 71.41. It just barely took out that left side low. This is an amazing chart. It's at the upper end of the range in a B. I got a feeling it's going to pull back, nothing like before, but I think it will pull back, and my target would be the 80 to 78 level if it starts to pull back, and it does that fairly soon. I'll talk about it when we get back.
Hi, folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. 9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. So I was asked, is the TLT, the chart, very similar to the IYR? And actually, they are very different. And the question is, how come? I think this is a question for Tom O'Brien to answer. You know, he's deep into the real estate. He understands it very well. I think he'll understand the commercial aspect. I think from my perspective, I'm looking at it as a dividend, two things. It's a dividend play as well as a belated real estate play. I think it's got the combination of the two, but my aspect says that it is from the chart formation. There are other factors that I don't think I know of. I wouldn't be surprised if Tom understands exactly why it was so volatile. 71 to 84, then back down again, and then back up again. It's done it a number of times. That is big stuff, and it tells you that the volatility is there for a particular reason. My thinking is the reason is it's partly a security. It's instead of going into bonds, instead of going into anything that has greater risk, this is the one that gave you the chance of capital gain. I'm just doing it purely on a technical basis. It's because the MACD crossed positive way back in right here. That was in right there. January of this year. This is the daily chart. It crossed positive, and it's just held beautifully, and only now is it starting to turn down. Look how it mimics, the green line mimics the price. And that's something to keep in mind. It's holding the 9-period moving average. I would not treat this as a short, even though it's got the history of plummeting. Not at this particular moment. I'd have to wait to see other conditions, because that's stochastic at 94%, showing no inkling and on-balance volume of wanting to pull back. I don't see this as a short. Would I buy it here? I'd have to think about that. Would I buy it here? I'd say that probably if I did, it would just be a very small position as part of a portfolio. This would not be my major focus at this particular time. Okay, so a couple of things that I want to look at is, so I hope I answered the question there. So on a very short-term basis, I don't think it's going to break the 80 level. I think it's going to try to test the 82s, and that's going to be very important because it's able to test the 82s, and the MACD deflects back up again. Stochastic holds, it could have limited upside, but upside nevertheless, and it could go to the 84.5, even the 85.25 area. So it's looking very good right now with no sign of an overbought situation other than the arch, and this is the snail. Oh, I forgot all about that. The reason how I got this, I used to follow, I'm almost sure it was Merck. It might have been Pfizer, but it was a pharmaceutical way back in the 80s. And there was one move that they had went on in a weekly chart for months, and it looked just like this. Tiny little candles, and everyone went up and up and up and up. It's as if you could have closed your eyes and just bought it. It didn't matter because when you look back, you didn't even remember that there was a peak. It just kept going up. But here it's a little difference. It's starting to falter, and it says the IYR is starting to move to the side. When that right side is taking time and not price, it means just be a little careful. All right. Questions I had. Oh, let's do that. I get my question about Boeing. Hey, I haven't had all those oil service questions that I used to get very frequently. I guess they gave up on me because we're still in my newsletter. I don't know if I've had an oil service. I don't know what the reason is. It goes off my mind. 413.88 was the high on the 6th of Boeing. 412.72. Yeah, you see that a lot of these charts are making this right shoulder without the same kind of strength. And that just says to me, it doesn't have to be right away, but I think we're starting to falter. It doesn't say there can't be some upside, but it's starting to say that the upside, the veracity of the power of the technicals is starting to falter, and therefore is making these charts a little bit more susceptible to some kind of a slide. Will the slide take Boeing under 380? Remember, that was the gap up of the 30th of January. I can only go one step at a time. It has to close under 401, which is the 9-period moving average. And it's 410.94 right now. Excellent move, but it's making, I'll draw it in. So it's more like a V-shaped pattern, but I'll draw it in as a cup right there. One side, other side breaking up to the right. All right. Next question I had was, Verizon is up. Is it? Verizon is up? Nah, Verizon is down. So, I had a question about the dividend stocks. So my thinking always is that, the standard dividend stocks, Verizon, AT&T, this is an area that I'm kind of skeptical, because I think they're going to come under tremendous pressure from other sources. I'm just waiting one of these days in the next year. I wouldn't be surprised if Google just makes an announcement to say, hey, you want to make your telephone calls, you make anything you want, use us, and we'll even supply the medium from which you can do it, the tablet or whatever it is. It's coming, and I don't see how Verizon can't be affected by this. That's the way I'm thinking about it. So it's stuck in a range of 50. I wouldn't take this as a dividend stock. I wouldn't take XOM as well. The kind of challenge with batteries and all the other things that are coming up for energy. I'm just thinking, making a leg E today, same pattern we've seen with the cup formation, holding quite nicely. If I knew in 3 months' time that it was not going to test 65, it's at 75 right now, I'd say, okay, dividend, 70, make it $5. 70, I'd take that little bit of a risk for the dividend, 4.5% or whatever it is, because you still have to pay taxes on it. I'm thinking that we missed a fantastic opportunity because I just wasn't thinking of it clearly enough. I discussed it at some point, but I never followed through with that thinking because there's just so much going on, right? And that was the IYR. Those are the guys that you get the yield and you had a chance of capital gains. So I'm going to be seeing if there is a sharp pullback in the anything like any one of the IYR SGP. Is that SGP? Is that right? What is Simon Property? Oh, SPG. Isn't that Simon Property? Simon Property? Yeah. So same thing. IYR. I know it's not as good a pattern. SPG is Simon Property. Oh man, I don't know how many times I've notated this. This is an A, B, C, D, E. It's made a peak E in the daily chart, getting ready for a bit of a pullback. Yeah, I'm going to be watching these guys because these are the guys, guys and gals maybe, that we're looking at because I think they have a better chance of dividend play if there's some capital gain involved. And I'm not seeing that yet as a sustainable force in the XOMs, the Chevrons, and the Verizons, AT&T, etc. All right, I think I covered that question. The dollar, look at the dollar. The dollar is trading right now up really nicely. It's up 30 cents at 97.02. Showed this, I had a great detail today for my subscribers. We've been long via the UUP, the Dollar Bull Fund ETF. UUP is trading right now at 25.83. I needed to have a decent day today. I didn't want another down day after that peak E, right in the Chapman wave, inside wedge resistance, green dash resistance line. I wanted to get back there. I want to get 25.92. I want to see that within another day or two. And then it says, hey, you know what? We could perhaps make that cup formation and test the 2612 area. And if that's the case, it'll have to be done by, I think, February the 20. You've got until February the 21st to get to this level here of 96.
The universe provides us with opportunities all the time, and I was no different. In 2006, I invested $2,500 in a 2-day master trader course taught by Tom O'Brien, then ranked as the #1 market timer for gold. The fact is, if you want to be the best, you must learn from the best. Hi, I'm Steve Rhodes, author of Mastering Probability and the Market Timer of the Year for 2018. To celebrate this accomplishment, TFNN.com is offering you a free 2-week subscription to my award-winning newsletter service, and there's no charge to you until day 15 unless you cancel sooner. That's right, we're waiving the normal upfront deposit, and this offer is available to anyone and everyone, even if you've tried Mastering Probability before. Sign up now, and I'll teach you the tool that identified the bottom in the Dow on January 26th, the morning that led to the largest daily point gain in history. This offer will expire on February 10th, so go to the homepage of TFNN.com now and click on Mastering Probability.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Nico DeHaan and Paige Clark have launched a special for a limited time only. Save 25% off Primal Edge and Health Signals. Just use promo code HEALTH for Health Signals or use promo code PRIMAL for Primal Edge and save 25% off instantly when you sign up. All the details are available on each order page at TFNN. Certified personal trainer Nico DeHaan's newsletter Health Signals comes out twice a month and is packed with great information on health, fitness, and diet. Primal Edge is specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox, and contains a special blend of ionic soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form. This sale won't last long. Sign up now using promo code HEALTH for Health Signals or Primal for Primal Edge and save 25%. For all the details, visit the front page of TFNN.com right now.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, everyone. Basil Chapman. I'm just doing PLAB. PLAB? You say, what is PLAB? Come on, PLAB. PLAB is right there, E/C. PLAB is Photronics Inc. I haven't looked at this. I couldn't even tell you how long ago it was. So I was asked a question, could I look at PLAB? It's trading at 11.25, up 23 cents, and I believe you have no position yet. Yeah, no position. This is very interesting. I could be wrong. I did this a little quickly. I'm going to go over it later. But I have a Chapman Wave Instant Restart. It's the flatbed restart, and it has the characteristic of where it goes higher, but it cannot break away. It keeps coming down, and it says to the trough of D, which is right there at 10.56. It's trading at 11.26. I'm thinking that by I've run out of time. 222 by the end of February, this retests the 10.5 area, 10.50 area. So I wouldn't be rushing into it. That's it, if I'm correct in this particular pattern. Now, the fact that it's rallying like this, the fact that it's in a monthly chart, leg D, this is all very good, and with very good technicals. I would not. I know you don't use options, so that puts out something that I was going to say. I would buy an in the money 1075 option right now, and that would be out into February. We're done. It would have to be March, April. It would be out April or May. So let's forget that because you probably don't do that. I am going to say to you, I think you've missed the boat right now. The risk reward is just a little too much. I'm looking to see an arch formation with a retest of the 1060, 1050 area, and that could be the new buy signal to go up even higher in 2019. So risk reward, it's looking great, but just for me, it's just gotten away too far. So before you go to Steve Rose and you're going to go to Dave White and then Tom O'Brien at 3, I'll be on at 4 o'clock to 5, sitting in for Tom O'Brien. So have a wonderful day, and hopefully I'll see you back very soon. Or check out my opening call newsletter. I think you'll find it beneficial to your trading, I hope, and position play. We've had $1 for almost a year. So it's not short term. It could be short term, but it could also be longer term. Hey, stay tuned for Steve. I'll see you in a little while.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.